Norway's economy might not be as safe as you think, and the warning signs are already here. For decades, Norway has been seen as an economic powerhouse, rich, stable, and future-proof, known for its massive sovereign wealth fund, thriving oil industry, and strong social systems. It's been a model of prosperity in Europe. The country's economic strength has been admired globally, with its citizens enjoying a high standard of living, low unemployment rates, and impressive public services. What if I told you that cracks are starting to appear in this seemingly impenetrable fortress? The world's largest sovereign wealth fund, a key pillar of Norway's wealth, is under increasing pressure, and the warning signals are loud and clear. Its heavy reliance on tech stocks, once a golden goose, could become a significant risk if the tech sector experiences a downturn. Oil, which has long been Norway's cash cow, is facing growing uncertainty as global attitudes shift towards renewable energy and geopolitical tensions loom large. And that's not all. Norway, like many other countries, is starting to feel the pinch of rising inflation, pushing interest rates to levels not seen in over a decade. Could Norway's golden era be in danger? Let's dive in and break down the challenges ahead that could shake the foundation of Norway's economic security. Sovereign Wealth Fund, a double-edged sword? Did you know Norway's Sovereign Wealth Fund, the world's largest, is worth a staggering $1.8 trillion? Last year, it posted a record profit of $222 billion, thanks to surging tech stocks. But here's the catch. This success is built on a fragile foundation. If the tech sector stumbles, Norway's economic cushion could shrink fast. Even more concerning, the fund has indirect exposure to high-risk assets like Bitcoin, which skyrocketed 153% last year. While this fueled short-term gains, the crypto market's notorious volatility could turn those profits into losses overnight. Norway's wealth fund was designed as a safety net for future generations. Oil dependency, a ticking time bomb. Norway's wealth is deeply rooted in oil and gas, but is this reliance becoming a liability? As the world accelerates its transition to renewable energy, demand for fossil fuels is expected to decline. If Norway doesn't diversify, its economic future could be at risk. Adding to the pressure, Norway's record-high oil and gas sales to Europe, driven by Russia's invasion of Ukraine, have sparked global controversy. Some critics have even labeled Norway a war profiteer, creating diplomatic tensions that could impact future trade deals. While oil revenues have long secured Norway's prosperity, they now pose a growing dilemma. Should Norway double down on fossil fuels, or will it leap a more sustainable economic model? The decisions made today will shape the country's economic stability for decades to come. But one thing is clear, depending too much on oil is like playing with fire. Rising inflation and interest rates, the silent threats. Norway's economy is facing a quiet but dangerous challenge: rising inflation. To combat it, the central bank has pushed interest rates to a 16-year high of 4.50%, and they're not lowering them anytime soon. While this move aims to stabilize prices, it comes at a cost. High interest rates make borrowing more expensive, slowing down investments, home purchases, and business expansions. This, in turn, can weaken economic growth and push unemployment higher. Unemployment is expected to rise to 4.1% this year and 4.2% in 2025, a clear warning sign. So, how long can Norway maintain this balance before cracks start to show? The central bank believes keeping rates high is necessary to prevent inflation from spiraling out of control. However, if rates stay high for too long, businesses may struggle, consumer spending could drop, and economic stagnation might follow. Is Norway walking a fine line between stability and recession? Right now, it seems so. The country must carefully navigate these economic pressures to avoid a downturn. Or is this just the beginning of a much bigger problem? That depends on how long inflation remains a threat and whether Norway can ease its economy into a stable, low-inflation environment without causing financial distress. Political uncertainty, a brewing storm. Norway has long been known for its political stability, but that might be changing. Recent tensions within the government led to the collapse of the ruling coalition, sparking uncertainty over the country's direction. At the heart of the dispute, Norway's stance on EU energy directives, a highly sensitive issue given the country's massive oil and gas exports. With elections approaching, the stakes are high. A shift in leadership could mean drastic changes to economic policies, energy regulations, and Norway's relationship with the EU. Will the next government government prioritize sustainability, or will it double down on fossil fuels? The answer depends on political pressures and voter priorities. If green policies gain traction, Norway may accelerate its transition away from oil. But if economic concerns dominate, fossil fuel investments could continue. Will new policies attract investment or drive businesses away? It depends on how predictable and business-friendly they are. Uncertainty often makes investors nervous, and if policies shift too dramatically, Norway's reputation as a stable economic hub could take a hit. Could Norway's reputation as a secure, business-friendly nation be at risk? If political instability continues, the answer is yes. Investors and businesses thrive on consistency, and a shaky government could weaken confidence in Norway's future. Right now, the country stands at a crossroads. One wrong move and the economic consequences could be far-reaching. Housing market, a bubble waiting to burst. The housing market in Norway has long been seen as a crucial indicator of the country's economic stability. After a period of decline in housing construction, signs point toward a significant rebound in the sector. Housing construction is expected to pick up this year, with a notable surge projected for 2026. While this may seem like a positive sign, it comes with potential risks that could harm both the economy and investors. Rapid increases in housing development can result in oversupply, where the number of homes available on the market exceeds the demand. This imbalance could lead to a sharp drop in property values, causing a potential housing bubble to burst. As construction ramps up and new homes flood the market, buyers may find themselves with more options than they can afford, pushing prices downward. For investors, the situation is risky. If property values begin to fall due to oversupply, those who purchased homes or invested in real estate developments could face substantial financial losses. Additionally, a sudden downturn in the housing market could impact other sectors of the economy, causing broader economic instability. Given the high stakes involved, careful monitoring of the housing market's growth is essential to avoid an unsustainable boom. While Norway's economy has showcased resilience and strength, it's crucial to remain vigilant. The combination of an over-reliance on oil revenues, potential vulnerabilities in the sovereign wealth fund, rising inflation, political uncertainties, and a volatile housing market could pose significant challenges. By acknowledging these risks and proactively seeking solutions, Norway can work towards sustaining its economic prosperity. If you found this analysis insightful, don't forget to like, subscribe, and hit the notification bell to stay updated on our latest content. Share your thoughts in the comments below. How do you think Norway should tackle these economic challenges? Your insights could spark the next discussion. Remember, in the world of economics, nothing is set in stone. Stay informed, stay curious, and together, let's navigate the complexities of global economies.